This is just AMZN on Monday, August 2nd, 2021. So my last video was on Friday, July 23rd, and I talked about on that day, I think I talked on that day. I don't think I did it earlier, which I wanted to get a little closer to earnings, talking about what could happen on earnings. I was hoping to get a little bit of a sell-off, pulling back into the all-time high or previous all-time high. And then I thought if we got some bearish candles, we would have a really good place to gap up anywhere up here and trap a lot of people and just keep on going. And we got a gap down into what I would consider somewhat of a no man's land. So obviously I'm recapping a little bit of what's happened from last week while I was away, and we'll jump into the 5-minute here. But if I extend this channel here, extend to the right, we're kind of right in the middle of where these two lines are diverging from each other. We had gap down from a little bit below the middle of this uptrending channel, and then this downtrending line, or it should be a channel. There it is. This was where we were kind of doing these pullbacks. So we were doing these moves where we'd go up quite a bit and then pull back, and we had a range of these, and it worked out pretty well. Right now we're below this uptrend channel, which is the first time we've been here. Actually, I take that back. Technically, we got in a couple of closes here, got right back above it pretty quickly. That's still possible, but this is, I guess, the furthest we've been below it ever. So I'm going to zoom out, and you can see I've got some lines on here going quite a ways. But this channel for me actually started way, way back over here, and I grabbed the lows from this and tagged the low here and tagged the low here, and it was holding up really well. We broke through it ever so slightly, and I don't know if now we go back and reinterpret that as being a bit of like a shot across the bow that, oh, it's possible we could be out of this channel, because we hadn't been. I guess the first shot across the bow would be we didn't get back up into the upper line of this channel. And then we had this inverted hammer, and we've been down from that. Like the previous all-time high didn't get up there. So I would say that's kind of the first real, shot across the bow that we didn't really make it back up there. And then kind of maybe reinterpreting this, being like, well, that was maybe a hint. I wouldn't say that that's, something that you could say, oh yeah, that's definitely it. It broke down there. It didn't. I would say this is definitely a failure to get back into the upper edge of that channel. And so here we are now. Where we're actually sitting, if I hold my cursor here, kind of today's close is really close to this kind of X shape, like X marks the spot, I like to say. We're pretty close to retesting where this, let me draw, sorry. Highlight that. Nope. There we go. Okay. So this was consolidating here. It's really hard to see because I use purple, and it's the same color. Let me use red. There we go. So this consolidating here and consolidating here, we're almost at a point to kind of retest this same level. That would be a little bit lower. That would be this edge right here, if we come down a little bit more. And we totally could. I feel like this no man's land means we could go either way. We could go up and get right back into this and retest this from below. We had about a 7% gap down, and it's just an area that I think some people were thinking, I'm going to wait and see. Now, obviously, a lot of people were getting out. There's a huge volume, much higher than earlier highs from a while ago, than this big breakout. This is a really large volume. So even to say that, oh, some people waited it out. I mean, there's a lot of people that did something that day, whether they got stopped out or just got out. And we're taking out all of these bull candles, taking out all of these bull candles. It's not a very strong bullish case right now, except that we're still in an uptrend. We're not fitting the uptrend that I've got drawn here, but this is still making higher highs and higher lows. Technically, there's some shorter term, lower lows here, but this overall general move And I think the 100 simple moving average is right in this area here as well. So we're still above that or near that. Actually, let me take that back. I think we're just slightly below that now. So we're still in a place that we're trending up, even on the long terms. I think the 200 simple moving average is just below us where we're at now. I don't have a very quick way to switch over to that. Let me see if I can just add that on to my studies real quick, because I have not done this in a while. Simple moving average, add simple moving average, and we're at 200. There we go. Get this in here. That's going to reset it. Okay, so there we are. So there's the 200 there. And let me just go ahead and add the 100 while we're talking about it. Can I copy this? No, I don't think so. Simple moving average. And this is the 100. And let's just give it a slightly different color. What am I not using? Here's a green. I'm using a green line. And there we go. Okay, so we're right below the 100. We actually gapped up. So this is interesting for today. So Friday we closed below it, and then today we actually gapped up and opened above it and then sold off. So this is actually, today's candle is actually a bullish gap and go. It didn't work. If we get another bullish gap and go, like if we can gap up tomorrow, the same thing could happen. We fade again, moving the opposite direction of the gap. But we've got, 2 days here, inside day today from yesterday. This is really looking like a little bit of a flag here. Definitely a consolidation, and we'll look at the 5-minute. There's not a lot of range on this to what we're used to seeing. And the fact that it's an inside day, we'll see if we get that continuation. This is not, these lower wicks are not large enough to look like a hammer or reversal or anything like that. I just wonder if, because the 100 and 200 simple moving averages are so close together on the daily, I wonder if we do just push down to the 200, and that would give us a better launching off point. If we zoom back a little bit here, we were just going sideways through all of that. Here, we did something similar with these two candles where we were below, had closes 2 days in a row below the 200, gap down, looked like it was going to roll, and then completely shot up. So I guess if we could do something like this where we go down a little bit more and then we get a bigger springboard, like I said, I guess that's the similarity that I would say. So maybe a third day in a row where we actually go down a little bit more, see some buying come in and get a rally, that would show something similar to this. So that's what I've got on the daily. It's because earnings was after the close on Thursday, I wouldn't have been able to do too much to talk through, what all was going to happen for my Thursday video and then a Friday video. So thank you for understanding that I had some personal time away, and getting back into this now. We'll see where things go. So let's jump into the 5-minute. Actually, I'm going to zoom out. Look at this. So let me zoom out again. Sorry, let me do this differently. So my last video was here, this day, Friday, and we got the pullback. We got a bit of a move back that we wanted. I just wanted to gap up, and obviously we got a gap down. And we are right below this line. Man, we slammed right into it. This was a great place to be shorting here if you're trading in the first. Now, I'm not normally, I didn't either, but I don't normally trade in the first couple hours, especially on a Monday. But this was a great place, slamming our head up against this level, getting back up into it with the inverted hammer later in the day, and just rolling back down. And then today, we couldn't even get it going to get up that high again. But this line, it goes back to November 5th, 2020, 33.66.80. I got to refresh myself with all these different levels that now we're getting back into again. And I thought maybe there's a chance we get back down to 3,300. We did that, basically in the first, 5-minute candle, 3306.98, almost down there. And then, like I said, the inside day. So everything today has been inside of yesterday's prices, but just not a lot of movement here. So if we zoom back into just today, you can see zoomed in here, we just chop sideways most of the day. There's a little bit of a channel. If I hold the cursor here, you can see anytime we rallied, we got back up into this 33.40 price, except right here, we actually didn't touch it by 15 cents. So maybe if we think about it a little lower, like 33.39, we touched that each time we came up. And then we went back down only about $12 lower consistently. There was a dip here and there was a dip at the end of the day that then still recovered. But most of the times we actually kind of got down to like 33.27, maybe a little lower, and then you lose that one. So yeah, I guess that would have been the only spot that didn't touch. And then looking at the RSI, there weren't really that much of the double tops or double bottoms I'm looking for. Definitely not showing a double bottom down here where it's looking sold off. You get a little bit of a double top shape here and then kind of that retest. So right at 1230, with my rules, right at 1230 was a good place to look for this to be an overbought place to get into puts. So we'll jump over and look at 1230 on this. So the call, doing something very similar, doing a double top here, almost got back up into that retest at oversold right at 1230. So you had the confluence happening on the Amazon 5-minute, on the 3,400 call expiring this week. I looked at some of the options next week and the week after for August monthly expiration, and I just really didn't like the volume. I think there's a lot of waiting to see. And then here I'm looking at the 3250 put expiring this week. And so because it's a put, it's looking opposite. I'm looking for a double bottom sort of shape now. So you have a little bit of it here. There's, if you take this dip and then this dip, that's kind of a double bottom, kind of ignoring this middle part above this line. And then you get a little bit oversold right at 1230. So this would have been a good place to be buying this put from these rolls. So buying at like 660 would have been a good price. It actually went down a little bit lower, all the way to 612. So you're down almost half an hour at this point, $100 risk. And it only makes it back up here to a little bit more than 7. And then comes right back down. You're right back, right around your entry. It doesn't go back down lower than this low. So this was a good low. There was a nice hammer here. Oversold again. I'm sorry, I'm saying it right. Oversold again here, oversold again here. These both stayed above the 612 price. Ultimately, it made it only up to still less than 8. So maybe getting in at 660 and going up to 760, you could scalp an R, but that's it from this option. And this is the 3250 put, and it's a Monday. Like, I'm less than 100 points away from, so 3350 was here. I'm at the 3250. I'm less than 100 points away on a Monday. So this is telling me there's a lot of premium that got sucked out of all of the options. This is a bigger move than, or maybe a different location than a lot of people and even the market makers expected. They're not giving up much premium as this bounces around. There's a lot of consolidating going on through here. Consolidating. It sounded funny how I said that. But if we look back at the put, I went through and did this, and you can do this on your own too, but I went and looked at the 33.30. Unfortunately, we don't have strikes every $5 for this week's expiration. If we look at the 33.30, it's much more expensive. You have some of the similar things happening, kind of this double bottom and a retest here. So if you're getting in on this price, you could have been buying at like maybe 1575 would have been comfortable to set that up. Wouldn't have filled here, would have filled here, but then it has a low all the way down to 15. So even if you bought at 16 on this candle, you probably got stopped out at 15 on this candle. It's just harder to have a $100 risk. with this option being that much closer to the money. But then this one, let's say you bought at 15 and weren't stopped out at 16. You've got a 3R target on a Monday, so 16 up to 19. It didn't even get up to 19 here. It had to wait till later in the day. So you could have had 3R. Wait, I take that back. Nope, it dipped below 15 over here. So the only way this would have worked is if you had waited to buy at like 15 over here and then get out at 18. Even buying at 16 here and holding for 19, you would have been stopped out. Definitely would have been stopped out at 1493 or some slippage. Probably would have gotten positive slippage and then it ran without you. And I hate getting slippage or hate getting out and then it runs, unless it dips way, way down and stops me out for much or higher than, if it stops me out for an R and it goes down to 2 or 3 R's lost, but I'm out already, and then goes without me. Those I'm fine with because I lost an R and didn't lose like more than that, more than an R or 2 or something. So this is 3,300. I looked at the ones in between. So 32.90, like I said, there's no $5 strikes. 32.90, lower volume. You can look at all these prices, 32.80. I tried 32.75. I'm like, oh, there's no strike there. 32.70. You can just see the volume completely drops off of these. Actually, I think it was 32.80. Let me go back to that one. Was that right around $10? Yeah, so that was right around $10. So I kind of liked this one because I like that $10 price. And it had a similar double bottom here. And then, actually, no, double bottom here. And then this little dip right, not this one, but this one right at 12.35. Could have been buying at 11. And this actually would have worked to buy at 11, stop at 10, weren't stopped out, but then still didn't get up to 14 for a target. So even 32.80 wasn't working great. And that's a little more affordable, but still it just doesn't have as much of a move. So then if we go from there and look at like next week's options, so look at next week's, let's look at 3,200. You can see what's going on here with the volume, so I think there's just so many people waiting for things to settle down. These are still expensive here. We came down to like 11, I guess, right, really between 10 and 11 here, but we don't have that much of a move back up. It's going sideways, and the more it goes sideways, the more premium gets sucked out. Then if we look at the next week, let's go out a little bit more and see what this is doing. So this is monthly expiration. You'd think monthly expiration would be really high. You got a couple of volume spikes in here. So on this value is 151 contracts, 100 contracts right through here. But this is hardly moving at all. Later in the day, when it is actually having a little bit of this rollover here, there's not any sort of follow through with the options. They're just not moving enough, especially at this distance away. But then if you get even a little bit closer, like 3,200, now it's $20, or 2,000 for one contract. You can't really get a comfortable $100 risk with this expensive of a strike. So this is 2 weeks out. Same thing's going to continue happening if you go more weeks out, or if you get closer in strike or closer in date, it's just going to get more expensive, and it's still just not moving that great. So for a Monday, not exactly what I thought we would be seeing after earnings, after things have started to kind of settle down here. I thought we'd at least still get some of these ebbs and flows in the options prices, but not yet. I think there's more waiting to see how it's going to go. So back to the waiting to see, back to the daily. If we do get a breakdown and push lower, I'm still looking for a buy location. I think the 200 is a really good place. 200 simple moving average is a great place to be buying shares. It could be a good place to look to buy some calls off of this level, like 32.52, 32.50, somewhere in here. Poke down below this line a little bit and then get a nice bounce of a hammer coming back up, kind of like this candle here. If we can get a move down, touch a moving average, get through the purple line over here, then move on back up, that would be great. We could turn it into a nice little hammer, get a little bit of sideways, and then get a rally started. And then we could just do this portion again, where we go up to this purple line here. It'll look just like that, right? So what could happen? Get a hammer here, push back up into this line, trade along that for a little bit, do a little dip down, and then see if we can get going again. That's the bullish perspective. From the bearish perspective, I would still think we get a little more of a retest eventually of this being a double top. So that means at some point getting a retracement back up to the previous all-time high, back up into this hammer range, and then roll over here with a retest of that neckline price. So we could do that anywhere in the 3,500 to 3,550 range if we can get going that high. I think that's entirely possible as well. But that does mean a move back up. The other thing is, if we just have not seen the full bearish move here, a lot of bears getting out here, a lot of people buying to thinking this is a great place to be buying right off the 100. And if it breaks down more, I mean, this being an inside candle today, breaking down more, we touch the 200. People think again, oh, it's going to bounce. Then we push again lower. I mean, we really get the big picture going. Let me look, because now we got another month under our belts. Let me look at monthly, because I think this is a really big inverted hammer. Yeah, this is a really big inverted hammer up here. It is really hard to even zoom in to see this. It's a really big inverted hammer. Looks kind of like that one, just flipped over. Not much of a lower wick. It's really hard to see this with these lines on here. Nothing else looks like that for an inverted hammer. And let's see, so the open and the close. Open and the close are about 90, what is that, 93 bucks apart. And then the range, did that math right? Open, close. Yeah, that's about 93. And then the range is 466. So the wick is actually about 3 times the size of the body. So it's a little bigger than like a textbook hammer. The wick's a little bigger than a textbook hammer or inverted hammer. We're sitting right on the 5 exponential on a monthly. I mean, this could totally pull back to the 20, and that would be at 29.19 is where it's at now. And that's a great place for us to channel. So, I mean, 35.50 down to 2,900. What's the low here? 28.81, 28.71. Yeah, if we could get back to 2,900, this is our channel here. So let me zoom out, zoom back into the weekly, see what the weekly looks like. That definitely looks like a double top up there. And then we get a little bit of a retracement into the 5, maybe not quite the neckline. So we could retrace into 34.50 and then roll. Kind of like this one where it does a double top. We didn't get much of a retest, got a retest on this candle just down below the neckline. Sorry, I do this sometimes. I was saying this double top is similar to this double top, big bear candle to break down on a weekly. So in 2 weeks, if we get a retracement back up here, it's going to be close to the neckline. That would be 2 weeks. So like over here, retrace to maybe 34. I still think it needs to get to 3,500 to retest a neckline. So yeah, the weekly is interesting because we had a squeeze fire, we were going, and now we retested. We're back to basically the level of the squeeze firing here. We're below it. We've been below the 21 here and still gotten back above. We're below the 21 again. And it doesn't have to be in a hurry to get back above it. It could go sideways for a few weeks in this range and just stay here. but it definitely does not fit many of my lines in here. So where we're sitting right now. Trying to see if anything really jumps out at me. On a weekly, we have not had a weekly close, really below the 100 weekly ever. I say ever, but I mean like years, right? So like, what was the last? We've just kept bouncing off of it. So when we were going sideways through here, so it was, what year is that? 2015, were we actually below the 100 last? Closes below. We tagged it here and bounced, and then we had a high wave candle basically closing on it, and then gapped way down, and people thought that was the end of it, and that rallied that week, closing above. With how sideways this has been and these breakouts, so sorry, I say these breakouts, it did break out after hours. After this earnings, it pushed way up to, what was it, 36 something, then came all the way back down and actually barely got higher. Only got higher by what, $1.50 or something? Yeah, because the new high was 35.54. The high over here was, what was the high over here? 35.52.25. Okay, so $1.75 higher when this candle actually came in this day or this week after this earnings. So this being a small breakout, this was the real breakout. Does this just need a bigger rest? Does this need to pull back a little bit more? I think its base is definitely down here on this line. And this line is not letting me click on it. 29, whatever that line is, 29.30. Somewhere in there I've got a nice line, but it is not letting me select it right now. Let me go back to the daily. Where am I looking? This line, 29.30. That's what it is. So 29.30 from July 6th last year. We've not had a close below that line. And that has been our channel. So 35.50-ish and 29.30. That's kind of the range of this channel. We had some breakouts. This definitely looks like a double top. And I think we could come back down to 29.30. I don't know that we're going to go straight down to it. But man, look at this volume. We've not had this much volume for earnings since we did this day. And that volume was massive, even higher. So no, I'm sorry. The volume we had yesterday or Friday was actually beaten out by some of these other days in here as we were selling, doing this big sell-off after this earnings. And then that's when we rallied off of 1600 and never looked back. That was all of those volume days. So it's definitely, if you think of volume and the price that it's at, the volume today, because it's at a price that's twice as high as 1600, the volume today represents that much more money, the actual dollar figure of what was spent on this much volume is much higher than any of these back here. Even this day, because this is not quite, let's see, not quite half the price, but much higher volume, but the volume isn't double. I'd have to crunch the numbers to figure out where does this volume spike at this price, where does that, what does that look like in terms of today's price? I'm sure it's a quick multiplication I could do, but I think I've talked enough and I'm just trying to get back into these, but I think this really gives us some good perspective. I really want to trade. I really want to have, something I'm looking for in the chart show up just right to meet my plan. I just think there may be a little more waiting. I don't know that I'll be putting on a trade tomorrow or even this week. But I really just need to wait and see for the right setup. So hope this helps. This is Just AMZN. Thanks.